Hey traders, ever found yourself hesitating before entering a trade? Unsure if it's the right moment? Well, today's video is a game changer because we're breaking down 3 extremely effective confirmation methods that will give you more confidence, reduce your risk, and help you make better trading decisions. So, grab your coffee, get your notepad ready, and stick around till the end, because these techniques could completely transform how you enter trades. Alright, let's dive straight into method 1, the trendline confirmation method, which is one of the simplest yet most powerful methods. Imagine this. You're looking to open a buy trade and the price is gradually moving towards your key support level. But if you zoom out into a lower time frame, you will notice the pullback has formed a minor downtrend. Now, what you'll do is draw a downward trend line on this correction move. This trend line acts as a dynamic resistance. Once the price hits your support level and breaks through the trend line, you've got a solid confirmation to enter the trade. But why does this work? Well, it works because you're using 2 powerful signals together, the support level and trendline breakout, making this entry highly reliable. Just remember, always wait for the breakout confirmation before jumping in. Next up is candlestick confirmation, one of the most reliable entry strategies out there. So instead of jumping into a trade the moment price hits your level, wait for a strong candlestick pattern to appear. This is what separates smart traders from impulsive ones. For example, if you're looking to buy at a support level and suddenly a strong hammer or marubozu candle forms, you're likely looking at a great entry point because the big players are stepping in, and the probability of reversal in this case is sky high. But if you see a weak doji candle, take a moment to pause, as a weak doji means the market is indecisive and it is better to wait for confirmation. Simply put, strong candles equal strong confirmations. Be patient, wait for them, and only enter when the market confirms your buyers. Now for the final, but definitely not the least of the 3 methods, using divergence. Divergence happens when price action and indicators like the MACD or RSI don't agree, which is almost a certain indicator that big moves are coming. So here's how it works. Let's say the price is making a lower low, but your RSI is showing higher lows. This means selling pressure is getting weaker and a reversal could be right around the corner. Now, imagine the price hitting a major support level while divergence appears and volume increases. That's a triple confirmation right there. And of course, more confirmations equals higher accuracy in your trades. Don't rely on divergence alone, of course, but when combined with technical analysis and volume, it is one of the best signals out there. And there you have it. 3 game-changing confirmation methods to level up your trading. Which method do you use the most? Drop a comment down below and let me and everybody else know. Until next time, trade smart and stay profitable.